In today's video, we're going to be taking a look at Amazon. Now, Amazon has been trending sideways inside of this small range for quite a while now, since the beginning of September. And I actually think the breakout is going to happen very soon. So let's dive into some technical analysis, use some of my favorite tools and techniques, and I'll show you exactly why I think this is going to happen and what my price target is for Amazon. Oh, and by the way, I'm already in an Amazon play, a long position, and I'll tell you exactly what that is, where I entered, and where my targets are for it. Now, real quick, just before we dive into this chart, I do want to remind you that I have a Discord with multiple hundred members trading together every single day, mostly stocks and options, but we definitely take a look at everything. And if you want to come join and trade with us, I'll put a link in the description below. Feel free to click that and come check it out. I think we have some of the best traders that I've personally ever seen. And the group community is excellent, so if you're looking to learn, this will be a great place for you. So let's dive into the Amazon chart here. Now, as you know, if you've seen some of my previous videos, the very first thing I like to do on an empty chart like this is just throw some general support and resistance lines on the chart. These are spots where the price has tested and failed multiple times, whether it's from the bottom going upwards to a certain level, or from the top of a chart coming back down to a certain level and bouncing off of it. Now, in order to find these, I simply just hover my mouse around the chart with this horizontal ray tool selected on TradingView, and when I'm seeing this dotted line up at multiple different spots, where the same exact price was hit before a reversal in the direction that we came from, I'll just add those lines to my chart. So you can see, for example, where I'm hovering my mouse right now, the price came to right around here in time, right around this $2,025 level, right here on September 4th, and then again later in the beginning of October, and then again the same exact spot right through here in July of 2019, and then a little bit through this area as well in February of 2020. So this is definitely one of the very first spots I'm going to add support and resistance to. And I'll look for just a couple more of these. I see this one in right here where our March 2018 highs actually came to, and then of course a perfect tap in our March 2020 lows right at that exact same level right there. So that's definitely a strong support and resistance. And I see another one kind of in between those two, right around 1750 here. You can see when we came to it in June of 2018, that's where we got a peak, and shortly after we used it as support. This is a very common pattern you'll see, where a level that's used as resistance on the way up, once we break through it, it gets retested as support before we actually do break up further. And then of course this level was used all throughout this area as well, inside of here, and just many other support lines all throughout 2019 and the beginning of 2020. Now once we get above this level that's around 2025 or so inside of here, it's actually much tougher to pick out any sort of support and resistance lines all the way up until almost $3,000 right in here, where this spot was a little bit of resistance before we broke above it. We came back down and supported a few times in here, and again in here. And then similarly, we have a resistance kind of at the top of that move right there. Maybe not right at the top of the wick, but I like this line right in here around 3,300, and actually kind of where we are sitting right now, as it resisted through here and these areas a bit, and through here, and potentially where we are now, it'll be a resistance again. And those are kind of the key ones I want to have on my chart here. I'm sure there's a bunch below this $1,620 level that we've drawn in here, but it's pretty unlikely that price is going to get down below that. And if we do go down below that, it's going to be a while from now. So I'll have time to come back to this chart and add more levels below if it does come down to there. However, for now, I want to keep my chart as clean as possible. I know that if we start to break below this level right here, around 2950, or maybe even a couple of these wicks lower, you could probably have another level somewhere in here around 2900. But if we do start to break below this area right here, the next really good support is all the way back down at that 2027-ish range. So I know that sounds like a huge pullback right now, but Amazon is a pretty big mover. I mean, ever since March, we were at 1,600. It went all the way up to about 3,500 right now. So a pullback down to the low 2,000 range would actually not be that crazy. Now, personally, it's not something I predicted. As I said at the beginning of the video, I'm actually long Amazon right now, and so I'll get into that position shortly. So now I'm just going to zoom a bit more into this price action ever since late July here, where we've kind of been trading between these two pink lines that I've drawn, from roughly 2950 up to about 3300, with a few spikes below it and a few spikes above it. But in general, it's been pretty sideways for quite a while now, upwards of 5 to 6 months on AMZN. So let's dive into this horizontal price action. Now, the very first thing that catches my eye when I see horizontal price action is I'm looking to see if we can build some sort of triangle out of it. Now, triangles are formed when we're getting higher lows and lower highs over and over again. Let me show you what I mean by that. On our push up all the way up to here, we have this high up here, and then the low right after it we'll use as our first low in here. And then once we bounce off of this low, we get a high inside of here, which is lower than the high right here. And when we come back downwards, our low right here is higher than the previous low. So if we just circle all of those, we have this high, this low, this high, this low, and we can continue this trend all through here. We have this high into here, we have this low through here, and now who knows where we are now? Maybe we're finally going to break out of this pattern, but you can see that each of these 4 highs are lower in price than the previous ones. And on the similar side, each of these lows are higher in price than the previous ones. This is the definition of sideways action. Essentially, if we were in an uptrend, we'd still be getting these higher lows, but we'd also be getting higher highs. So this would have to be higher than this high to be the definition of an uptrend. And on the flip side, if we were in a downtrend, we'd still be getting these lower highs like this, but these lows have to be lower than these lows too. So when we're neither in an uptrend or a downtrend, we're just trending sideways. So if you wanted to keep it simple right here, you could just draw some trend lines. You could connect the tops of these, just like this high, and this high, and you could connect the lows down here, something like this, with each of these lows. And then you could just simply wait for a breakout of this triangle. We actually did get a small breakout down here, but it would have faked you out had you bought into a short position here. And now, of course, we can actually adjust this triangle line so that it holds those lows a bit lower. Now that we know, we just connect these 2 wicks, which might have been a better line to have at first. And then you can see that the triangle actually does hold the bottom there. And right now, we're testing the top of the triangle again. So if you want to keep your trading super simple, if we can break out above this triangle, you could start to take a long position towards the upside. And if we were to break below this triangle, you could take a short position to the downside. Now, personally, one of my favorite tools and techniques is called Elliott Wave Theory. Now, if you know nothing about it, I have an entire playlist teaching Elliott Wave Theory. I think it's the absolute best tool for predicting long-term movement in the market, such as at AMZN on a daily chart here. So I'd highly recommend you go learn and check that out. I'll give you the heads up that it's not simple, it's pretty tough, there's a lot of rules and guidelines, but once you get it, charts will seem to read better to you and make a lot more sense, and you'll be able to predict major movements in the market. For example, if you've been watching my videos for a while, you know that back in November, I actually took a look at Apple. And we took a look at Apple on the daily chart here, right around this candle right here. I believe it was November 27th that my technical analysis video was released on Apple. I'll put that in the top right corner right now if you want to go check that out and see what my Apple prediction actually was. But at that time, I told you I was long Apple, and I told you I was targeting this green box up here around $150. And at the time, Apple was only around $116 or $117. Now, of course, this green box was wrong in terms of time. However, in terms of price, it actually doesn't look that crazy that we'll finally get to this price target that's about $35 higher than we were when I made the video. Now, in the end of that video, I also mentioned that I was in some call contracts for Apple that were a bit longer dated for middle of January. Now, I'm not still holding these January 15th calls, but that's because I sold them for upwards of 300 or 400% gain, somewhere just a couple weeks later. I think it was in this push through mid-December right here. But anyways, back to the AMZN chart. I only bring up that Apple chart because I think AMZN is actually doing something extremely similar. In terms of Elliott Wave Theory and labeling this triangle, I think that this is some sort of A, B, C, D, and E through here. A 5-wave structure to make out our triangle in which we push upwards afterwards. Now, in the grand scheme of things, triangles only come in 4 waves in Elliott Wave Theory, and I could go back in time and try and count out all of the waves of this, proving that we somehow have a 1-2, whether it's in here or in here somewhere. This is our 3rd wave, and this would be our 4th wave in Elliott Wave Theory. However, I don't think that's actually necessary. I think we can validate this triangle pretty easily without proving a count up to this point. And furthermore, a count is actually extremely difficult because of how parabolic all of Amazon's price movement actually is. So with that being said, this triangle is actually very difficult to miss on Amazon. We drew it without even knowing about Elliott Wave Theory, and it can be easily validated. So step number 1 in confirming a triangle, this is actually one of the guidelines that I like to follow. It's not a strict rule, so it doesn't have to apply, but one of the things that I definitely like to see is a decrease in volume through the entire triangle. And if we just look at volume on the bottom right here, this is our volume at our A peak, volume at the B peak, clearly lower than the A peak right there. You can see this lower than this. Volume at our C down here, just slightly lower or maybe about the same as our B peak. So I would have preferred a little less volume in the C, but then the volume starts to really decrease. And you can see all throughout this time, by the time we get to the D peak inside of here in terms of volume, it's much, much lower than the C. And then the E is our lowest point of volume for one of the peaks of this entire triangle. So the volume is definitely helping prove our case that we have some sort of triangle right here. Now in Elliott Wave Theory, when you have an A, B, C, D, E like this, you actually draw it by connecting the B to the D and the A to the C. So I'm going to adjust this top line just a little bit to do that. We'll connect this B to the D into here and pull that a bit sideways. And then we'll do the same thing with the A and the C. You can see that that's actually already happened. And then the E just luckily falls onto that AC line. So before the E was actually even in, we would have had this AC trend line drawn out all the way through here. And then it's just an awesome coincidence, let's say, that the E falls right onto this line. Of course, I don't think this is actually a coincidence. It's because there's a lot of buyers at this support line, but it makes our triangle definitely look really nice. Now, one of the other things I had on my chart up until this recent push was a Fibonacci retracement pull. So I had the pull from our C bottom down here to our D top, and I pulled it sideways right here. And if we just zoom in on this, you can see this is actually a really nice fib pull. Again, if you've seen my other videos, you know that with a Fibonacci retracement like this, my favorite spot to purchase is inside of this golden zone right here. It's this 0.618 to 0.65 zone. And what this actually means is it's a 61.8% to 65% retracement of this whole move. So we have the move that goes from this low up to here. And then if we just pull back, if we lose 61.8% of the value of that, it goes down to this golden line right here. That's what the Fibonacci retracement is telling us. And in my opinion, this box right here inside of these two lines that I have, my gold and yellow line, is called the golden zone, and there's almost no better place to take a trade. Now, if I just remove my Fibonacci retracement to keep my chart clean, you can see how perfectly this box that I have drawn, where it was that golden zone, lines up with the bottom of our triangle right here. We have this candle right here, along with these two, that come perfectly inside of that box and at the bottom of our triangle at the exact same time. Now, this is called confluence in the market, and when you find things so perfect like this, you absolutely better be taking that trade. It's a truly simple setup and one of the best you'll find. So personally, I like to trade options with Amazon, and the option premiums are actually extremely expensive. So to combat this, I actually ended up opening a debit call spread on Amazon, and I opened it on this green candle right here on January 19th. And I actually personally bought a $39.50 4,000 debit spread. So what that means is I bought the 3,950 call and I sold the 4,000 call. Now, if you don't understand debit call spreads at all, again, I have a video on this explaining it much more in depth. I'd highly recommend you go check it out. I bought these spreads for 1.75, which ends up costing about $175, and they're dated for middle of March. Now, to put it short and simply, what this means is that if the middle of March comes and Amazon is above this $4,000 price range, these debit call spreads are going to be worth upwards of 50.0 or $5,000 for each one. So if Amazon does move from the $3,100 that I bought it up another 900 points by the middle of March, I'll have turned each of these contracts, which cost me around $175, into $5,000. The risk reward of this is exceptional. And as of today, these contracts are actually sitting up about 120 to 150% because we've already pushed almost 200 points off of these bottom lows right here. So let me show you why I chose these 3950, 4000 calls. In Elliott Wave Theory, when you have a triangle like this, typically once the E bottom is in, it means that there's going to be a thrust upwards in the market. In other words, we're going to push up strongly, swiftly, and pretty far upwards. And as of now, you can see that's happening pretty well. To get the distance that we're actually going to push upwards, you need to measure the widest part of this triangle, starting from its inception candle right here. So to do this, I'm just going to extend these lines just a little bit more so that it can cover this top candle right here, where our triangle, our A wave actually starts, and extend this bottom candle as well. And then I'm going to use this price range tool and pull from the top right here, not from the top of the candle, but the line that goes above it. And remember, this line is connecting our B and our D right here, and doesn't matter where the A starts. So we'll pull a price range from there all the way down, just straight below it to where the triangle line that connects our AC meets up with it. And you can see this is about a $740 price difference from the top to the bottom of our triangle. We're simply going to copy paste this, and we're going to move it to where the breakout of our triangle actually happens. And you can see that's actually right about here is where we'd most likely break out of the triangle. So if I take this line and drag it right to where this breakout might happen, of course it might end up being later in the triangle, so maybe all the way down here. But for now, let's just say it happens somewhere around where we are right now, maybe even a little bit lower, just so we have a little breathing room to go sideways, then potentially break out. You can see that this ends up coming all the way up to about 40.27 on Amazon. In other words, this Elliott wave triangle that we've predicted is predicting a price movement relatively quickly up to about $4,000 on Amazon. So the reason I chose the 3950 4000 spread is because they have extreme potential at that 25x potential from $175 to $5,000, actually a little bit more than 25x, but close enough on the math. And also because my price target is around 4,025 based on the width of this triangle. Now I didn't go higher on my spreads. I didn't go to this 4,027 because one, I want the price to be above my top target. So if I were to go higher, there's a risk that maybe we don't get exactly to this price and we don't cross my threshold. And second, 4,000 is going to be a huge psychological resistance in Amazon. Regardless of any other technical analysis, when we come to major numbers like 3,000 or 4,000, there's definitely going to be some natural resistance, some people selling and taking profit. So it's unlikely that we'd break straight through this $4,000 level at the very first try of it. Now, in order to confirm this breakout's actually happening and to confirm this triangle is correct, the first thing we need to do is break above this D high right here. And you can see that our push upwards from those January 19 lows where we roughly bought up until just 2 or 3 days later on January 21st right here, we actually came right to that D high and rejected off of it and fell another 60 points down since. This is okay and is expected that we're going to find resistance at the D high because confirmation above the D high gives us really good hope and confidence that we're actually going to push upwards and that our triangle is finally finished, that the breakout's actually happening. After that, the next key resistance that I think we'll hit is the B high up here at almost $3,500. I think we'll probably see a very similar pullback like we are on this D to when we get to this B. And then the final resistance will be our all-time highs, of course, up here, around 35.55. So if we can break above this D high, this B high is definitely looking promising in terms of the next target. Above this B high, we'll likely see these all-time highs tested again. And if we break those, I do believe we'll head to this $4,000 price target, and my contracts will likely multiply as we approach it. So that's my Amazon prediction. I hope you liked this video, and I hope you learned something from it. Once again, if you want to trade options with me, there's a link in the description below. Come check it out. I promise you won't regret it, and you'll learn a ton. And if you did like this video, if you did learn something from it, or if you want to watch more similar content in the future, do me a favor, click that like button below and hit subscribe for future similar content. All of the content I post on this channel is very similar to this, where I'm helping you become a better day trader. So thanks again for your support and for watching this video, and as always, good luck trading.